Welcome. In this video, the new #1 highest profiting strategy that I have tested out of 107 strategies on my strategy ranking spreadsheet. This one is now the #1 spot holder. So let's get into all the rules to the strategy. I'll break down the rules, the indicators used here, go over a bunch of trade examples so you guys can see exactly what I'm testing, and then I'll do the 100 backtest and talk about all the results at the end. Before getting into all the details, very quick shout out to my affiliate exchange, Bitunix. This is a crypto exchange that's really great for anyone who can't access the majority of exchanges due to your geolocation. They're not requiring KYC or VPN. Anyone globally can use this exchange if you want to trade crypto. So check it out with my affiliate link in the description if you are interested in a crypto exchange. Now let's talk about this strategy. So this is a similar strategy to the ones that I did in my last few videos, but we've now added everything together, including trade management, to get the best possible result, and it definitely performed. So this is going to be swing failure patterns, divergence, trend direction, plus trade management. So I tested swing failure patterns, divergence, and trend direction, but we just used a rigid 1-to-1 risk to reward ratio or a rigid 1-to-2 risk to reward ratio. So this time we're going to be doing a break-even stop loss and targeting a full trend continuation move instead of just a set risk to reward ratio. Now let's get into the indicators and the rules. First of all, we have the stochastic RSI here. This is just the stochastic K line. So got rid of this D and we just have default settings here, stochastic K line, all right? And that is going to be used for the divergence. Next, we have the 200 period exponential moving average in purple here, basic 200 EMA. Then we have our swing failure patterns, which are given by two separate indicators. So if we type in swing failure pattern SFP by Lux Algo and swing failure pattern by EMREKB, those are the two that I'm using for valid swing failure patterns for this strategy. So those are the indicators. Let's break down the rules. Rule number 1. We have 200 period exponential moving average for the trend direction. So we're only going to go long over the 200 EMA, only short under the 200 EMA. Number 2, trade entry is only valid when there's a swing failure pattern and a regular divergence on stochastic K with a confirmed pivot of stochastic K. So we're not entering based on just a swing failure pattern. We're actually entering based on the pivot of the stochastic K. So when it goes from either rising to falling or falling to rising, that's a pivot of stochastic K. We're entering when we confirm a pivot with a divergence, and it's going to be a regular divergence, not a hidden divergence. Okay, so I'll get into the examples so you can see exactly what I'm talking about there. We're looking for a swing failure pattern that happens with the divergence present already, okay? And it'll all make sense when I go through the examples. Stop loss is going to be placed at the low or high of the swing failure pattern, okay? And then take profit would be placed at a new high or low of the current trend. So we're looking for a full trend continuation. Then stop loss will be moved to break even at 2R. So we get a 1-to-2 risk to reward ratio. Price moves in our favor. Go break even at that point. Then new highs or lows of the current trend don't provide a 1-to-2 risk to reward ratio from entry. Then instead of the profit target being at the highs or lows, it will be based on just a 1-to-2 risk to reward ratio, which doesn't happen very often, but it happened a few times or just a couple times. And that's just to ensure we have a decent risk to reward ratio. Most of them are much higher than 1-to-2, targeting just the highs or lows for a trend continuation move. Now, let's get into examples. So starting with our most recent signal on the current price, we have this one here. Okay, so this one is a loss. We'll get through a bunch of examples so you guys can see the different setups, just what they look like. So what we're looking for is bearish divergence because price is under the 200 EMA. We're looking for a bearish swing failure pattern and a confirmed bearish divergence pivot down with stochastic K line, okay? And so we come up here and we get some swing failures, but we don't have a pivot down confirming a divergence. Here we had a pivot down, but we didn't have a swing failure pattern yet. So we continue looking for a setup. We get a swing failure pattern here. And then we don't have a pivot down until over here, which actually negates our bearish divergence. So it's also not valid. We don't have a bearish divergence there since we make a new high on stochastic K. Would need to be a lower high with a higher high on price. That's what a bearish divergence is. But then we get our next one. So you can see here's a pivot down. So rising to falling on our stochastic K. And then we go rising to falling with a lower high, cross down, pivot down there. At the same time, our price made a higher high on close. And it also created that swing failure pattern there. So we get the pivot down right on this candle. And so that's a valid signal. Stop loss to the high of that swing failure. And then we're going to be targeting all the way down for a full trend continuation move. So lowest point in this current trend under this 200 EMA, right? So that's the lowest point before this pullback. So potentially a 1 to 20 risk to reward ratio for this one. It doesn't work out, gets stopped out. But we would do this. We would do a 1 to 2 break even stop loss. So let's just say that this price moved down in the trade's favor, gave us a 1 to 2 right there. So 2R, that would be the point where we go break even if this had gone in the trade's favor at all, okay? And then we just continue targeting the lows before the pullback. So here's one where it actually does work out. So let's cover this. And we can get a 1.7 or 1 to 7.5 risk to reward ratio. So this one was quite good. And so let's cover the rules here. So remember, we're looking for trend direction. We're under the 200 EMA, so we're looking to short. We want to see a bearish divergence and a swing failure pattern, confirming on a pivot down with our stochastic K line, okay? So here we get a pivot down, right? And then we get, so this goes sideways, doesn't give us a pivot up. Here we get a pivot up, let's go sideways, pivot down. Okay, so we get a lower high pivot down right here, confirming on this pivot down. So we need to have that as a divergence, which means between these two, we had a higher high on price, which we did. So you can see the pivot down happened here on this red candle, but then we make a higher high, and then we pivot down again on this candle here, which is the entry candle, which needs to have a swing failure pattern between that point. And we get it on that entry candle. So it's valid entry there. Stop loss is placed to the high of the swing failure. And then we're going to go break even at 1 to 2 risk to reward ratio. So let's go to see what that looked like in the moment. Right there, right? So here on this candle, hits that 1 to 2, we go break even at that point. So we go like this, break even, price never comes back to the entry, and then it gives us our 1 to 7.5 risk to reward ratio, hitting the lowest point, full trend continuation before that pullback, okay? So there's that one. Let's go back to this one here. So another valid entry, can see our bearish divergence here. Lower high pivot down on our stochastic K, right? With the higher high on price. Swing failure pattern also at the same time that we're getting our pivot down. Doesn't need to be the same candle as our pivot down, but we just need to get that swing failure in there between the pivots that cause the divergence. But we get the bearish divergence, and then we go break even 1 to 2. We get the 1 to 2 here, so we'd go break even at that point. But it ends up coming out and hitting it at break even. So that would be a break even trade example right there. The profit target would be the lows before that pullback, full trend continuation. So it would have looked like this for the profit target initially, but it ends up going at break even. So that's a break even example. Let's go back to our most recent last signal, which is this one here. So here's another setup that's valid. So we get our bullish divergence. Remember, looking for bullish divergence now. So a higher low pivot up, lower low on price. We're over the 200 EMA now, so we only want to be a long. Get the pivot up here, higher low pivot up. Same time, we got the lower low on price between those. And we have swing failure patterns there before our entry. So that's valid, okay? Stop loss, low of the swing failures. Then we're targeting highs before the pullback, like this. So 1 to 5 risk to reward ratio, 1 to 5.3 risk to reward ratio. We'd go break even at 1 to 2, right there. So at that point, we'd go break even stop loss, and then it doesn't come back to the entry. So successfully gives us that 1 to 5.3 risk to reward ratio. Let's go back some more, look for last setup. Here's another one that goes break even. So you can see it's a valid setup. We have lower on price here, but look at our bullish divergence there. So we get the higher low pivot up, which is our entry trigger, but only if we have a swing failure in between, which we do right here. So it's a valid entry, right? We go 1 to 2 here. Stop loss to break even at that point, comes back down. So it's a break even stop out. Okay, it's a break even. Here is some success. So we have, this one was a valid trigger. We had coming down here, higher low, pivot up, right on this candle here, this green candle. Entry trigger with our swing failure also present there. And so we take it. We go highs before this pullback, so it's actually over here. At 1 to 2, break even. Right there, break even there, doesn't come back down before hitting the profit target. So it's success, 1 to 2.8 or so, 1 to 2.9 risk to reward ratio there. Let's go to the previous signal. This one was big one, success. And so let's take a look. So we get our bullish divergence down here. You can see stochastic K getting our higher low pivots up here while price comes down for a lower low here. So we have our bullish divergence, we get the pivot up on this candle, and it was a swing failure down there. So that's valid. We got our swing failure, we got our divergence, we're over the 200 EMA. So we're looking to enter on that candle that gives us the confirmed pivot up while we have a swing failure. Stop loss to the low, and then we go break even at 1 to 2. So that would be right here. And as you can see, at 1 to 2, we never have price come back down to that entry. So we continue higher, looking for the highs before that pullback began, new trend continuation, full trend continuation. And so we do get the 1 to 9.4 risk to reward ratio, excuse me. So 1 to 9.4 risk to reward ratio on that one, successfully hits it. Then we go back to our last signal over here. All right, so this one's valid. Gives us a 1 to 10, and it works. So let's take a look. We go pivot down here, right? And another pivot down right here. So right here to here, there's our bearish divergence. You can see we go pivot down, then we go another lower high pivot down here. So this would be the trigger, this pivot down here. It's a lower high pivot. But at the same time, we go higher high on price between there. So it's our bearish divergence. And then at our pivot down, it's also the swing failure pattern candle. Okay, so there's our entry. And if we zoom out a little, you can see the lows of the current trend are over here. So we're looking for those lows, trend continuation down. And it gives us a 1 to 10.2 risk to reward ratio. Here's 1 to 2, where we go break even with the stop. So you can see price does not come back to the entry after it hits 1 to 2. So it's a success. We didn't get stopped at break even before getting that 1 to 10. Let's go back to the last signal over here. Okay, so here we have bearish divergence and a swing failure pattern. Pivot down, lower high pivot down here. Confirmed on this red candle. And off the highs there, we got that swing failure. So we got a valid entry, bearish divergence under 200 EMA. Stop loss goes to the highs there, swing failure. Then we're going to go break even, 1 to 2, right here. Price never comes back to the entry before hitting our target, giving us a 1 to 3 risk to reward ratio there. So that's success. Here's one. Looks like this one is one where it could have had an incredible risk to reward ratio targeting the lows, 1 to 13.7, but at 1 to 2, we go break even, remember. So in this one, it does get stopped out at break even before getting down there for that incredible risk to reward ratio, which just, it just happens sometimes. So can't get them all. But this one, you can see valid setup. We go lower high. Let's see. Here's our pivot down. 48. Here's another pivot down. Okay, so it's very shallow. It's hard to see here, but if you look at the numbers in the top left, you can see pivot up right here. So it goes 95.4, 95.48. So there's a small pivot up right there, and then we get a pivot down. So there's our pivot down, lower high right here. And at the same time that we get that lower high pivot down, giving us our bearish divergence, we got the higher high on price and a swing failure pattern. So we got a valid entry there on that candle for our lower high pivot down, giving us the bear divergence. Unfortunately, though, we go break even at 1 to 2, and then it gets stopped out at break even before getting down to that juicy profit target. So that's just a break even one there. It's got a funky one. Let's take a look here. So we're looking for now bullish divergence. We're over the 200 EMA. You can clearly see we got the swing failure pattern, but let's take a look at this bullish divergence. So we get pivot up here, pivot down, pivot up. It's a higher low pivot up. So what we need in between there is price to make a new low on close. So we get the lowest point on this one. This red candle here goes lower, right? Here's our pivot up and a swing failure in between. So got a valid entry trigger there. It's kind of a higher entry up there. So our risk to reward ratio, not as good, but here's our 1 to 2. And this is an example where we don't target the highs before the pullback. So otherwise we would be targeting here, but it doesn't give us a 1 to 2. So if you remember in the rules, if the high before the pullback began doesn't give us a 1 to 2, we're still just gonna target a 1 to 2 risk to reward ratio because we want to have at least 1 to 2. Okay, so that one ends up being a winner. Doesn't have any trade management because we don't go break even, seeing as the profit target is 1 to 2 risk to reward ratio, and so it does hit that up there. Looks like we have some divergence here, so we go pivot down here, pivot down right there. Next pivot down is over here. It's a lower high pivot down, but price makes a higher high in between and a swing failure pattern and gives us a 1 to 2, which then would be break even, right? We would initially be targeting this low before that pullback began, but gets stopped out at break even. We go 1 to 2 there, and then break even stop loss comes back up, gets it at break even. Let's take a look at just one more here. Hopefully it's making sense. I think I've covered all the different types of setups from break even and a loss, and the weird thing about not moving the stop loss to break even when the risk to reward ratio isn't good. But here we come up. Let's see, we get a higher close. Yep. Get a higher close here. Lower high pivot down. Right there, there's our bearish divergence. And then pivot down on that candle, the red one, we got the swing failure up there. There's the entry. Then to the lows before the pullback began, it was a 1 to 4.73 risk to reward ratio. Stop loss to break even at the 1 to 2 here. Never comes back after that point to our entry, so it's a success. And there it is. So hopefully that's enough examples to understand the strategy. It's time for the 100 back test. I'll fast forward through it now and show the results and talk about the results at the end. All All right, the results are in, and we have a new first place holder on the strategy ranking spreadsheet. So let's cover the results and then take a look. This was tested on Bitcoin USDT 15-minute time frame using the variable risk to reward ratio, so break even at 2R, then targeting new lows or highs of the current trend. Took 7 months, just over 7 months for the 100 trades. Here are the results. We had 31 winners, 30 break even, and 39 losses. Here's where it's good. The average win, 5.2R. So out of these trades that end up being winners and giving us those big, juicy risk to reward ratios, we had 3 outliers. One was the highest at 17.21R. We had a 14.12R, and we had a 10.24R. Those were the 3 big hitters. And then there were a lot in that between 5 to 10 range. And some, we get the 2.4s, the 4.3s, the 2.5s, the 3.0s, the 7.1s. So big range of risk to reward ratios throughout those winners, but the average came out to 5.2. So even if we subtracted, just ignored those big winners, let's say you just missed those 3 biggest ones, still the results here are incredibly good. So really, really promising with this test. And of course it should be, because it's now the #1 spot holder on the strategy ranking spreadsheet. As far as the most wins in a row goes, we got 4 as the biggest winning streak. Got the only 2 for the break evens in a row, and then losses in a row 5. So gain on the account risk in 1% per trade, not compounding, 122.43%. So just beating out the previous first place holder on the strategy ranking spreadsheet. So let's take a look at that. And I've highlighted in green the last 5 tests I did recently about swing failure patterns with trend direction. All of them performed incredibly well, but this one now takes first place, just beating out the previous first place holder, which a lot of people didn't like because it took 11 years of price data to find those 100 trades. This one just in over 7 months, getting the 100 trades and that 122.43% gain on the account. I put here 61% win rate, but then in parentheses I did break even, or 30 break even. So similar to this one right here, break even 17. This one also performing incredibly well, getting at that now 3rd place spot on the strategy ranking spreadsheet out of 107 strategies tested on this spreadsheet now. So these are the swing failure pattern tests. This one did the best out of not just the swing failure pattern test, but actually all of the strategies I've tested on my channel. So super promising. Swing failure patterns definitely have a lot of promise, and when combined with divergence and trend direction, can give us some incredible results, especially when we bring in the trade management, getting that stop loss to break even. Now, I didn't go break even 1-to-1. I did 2R break even because I noticed when I started testing a 1R break even to stop loss, a lot of those would miss out on big runs because it's just too soon to get that stop loss to break even. But 2R seemed like a sweet spot when I was going through doing some testing. And so that is where we're at with the new highest profiting strategy for the strategy ranking spreadsheet. Hopefully you guys appreciated this testing series so far of these swing failure patterns. Now that's 5, just kind of ramping things up from super simple, adding in the divergence, adding in the trade management one by one, to get to where we're at right now with the highest profiting strategy. So really interesting results. And of course, guys, it's only 100 back tests. Need to do more testing. What this does tell us, though, is super promising. Definitely something to look into and consider when designing your trading strategy. That is swing failure patterns, divergence, trend following, whatever you want to try out. Definitely adding the trade management aspect if you want to have that highest return on your equity. So that's it. Thanks for watching. Have a great day.